traders, welcome to the TMT Stock Market Strategy video for Thursday, June 30th. We did get a continued push higher from the previous day. We had a little bit of follow through, some more short covering. We are coming into the last day of the month, the last day of the quarter, which brings in mutual fund inflows. We talked about that earlier in the week, that we could see a nice pop up into the 61.8% retracement in the spiders and as well as the ES. So I'm looking for today probably a little bit more follow through, maybe a little bit of profit taken from some of the longs that bought on Monday and Tuesday. Tuesday and Wednesday. So it's kind of troublesome though when you have big gap down days, then big gap up days. Very difficult to trade, at least high probability type of trade. So it's either step aside, let for the volatility to subside, or look for some consolidations in certain areas of the indexes that you're trading. So I'm only going to put out two today. Here's the VIX. The VIX, as you can see, we're back down to these areas where it's starting to get interesting right now. I'm still not looking to buy in this area. What we're looking to do is I want to come way back down here if we can, and we really can do so if we get another push up. On non-farm payrolls come out tomorrow. If the number is liked by the market participants, then we could get a continued move up, and then of course the VIX could get back down to these areas. But I do think that once this little trend down is over, I think the VIX is going to really spike up, and I do believe that right now, based on my trading model, it's still on a sell signal. Okay, now things could change. I'm not saying that it can't, but the NYUD, and as you guys know, the advanced decline with volume, I really like this chart. Look at the lower lows and lower highs, and look at where we've gone from 2000 or 1999 all the way back up to 2078, and look at where this is going. Nowhere. It just barely got above zero. That is not actually very good for the bulls if you wanted to be, or if you want to look to buy this market. Weak buying, I treat this rally as suspect, and possibly a short selling opportunity going into next week. Okay, so these are the two that's really important you want to keep an eye on here. All right, so let's go now. Let's go into the indexes, and you can see I'm going to open this up, and you can see what I had yesterday, right to just underneath the 61.8% retracement. So now, what do I always say about looking for a trigger? Now, the trigger could be anything: a moving average, crossover, whatever is a trigger for you. You need to follow. I'm looking at maybe another push up a little bit, maybe at 207, maybe in the ES 2070, 2072, 77, and then let's see if it stalls. If it starts to stall, I'm going to drop it down to a smaller time frame and look for a trigger that I use for continued move lower. Okay. Now again, we have still got a very big gap up here. We could continue, guys, and I mean, you look at the volatility, how sick this volatility is. We could continue to move higher. I told you that is possible. I think if we take out this area, right, on a closing basis, and we kind of stay stuck right in this area, create some sort of a horizontal trend line, we could actually catapult to the next area. Remember, it is an election year, so that is extremely possible. Why the markets would not move really too much lower than where it is now. Remember, a break below. I'm looking at this, and I'm gonna put this here: a break below 204, okay, which I'm looking at 2040 in the ES will challenge this low here, and an ultimate break of that low, we would be back in correction phase, and we would literally this time we wouldn't get out of it so easy. We'd be in a correction phase, and I would look to short any type of a rally, any type of a bear flag rally. So I'm real nervous about this because I do believe that the markets are ready for a decent sized correction. And the NASDAQ just looks terrible. I'll get that to you in a moment. Here's the that line that I pointed out yesterday. We got right to it. Coincides nicely with the 61.8% retracement. Here's another gap area that needs to be filled. Don't short just because it's here, guys. Let the market go up, and then let the market start to roll back over. Take out a swing low, and then look for a downside targets, okay? I am looking for same thing. Remember, if we take out this 198 area here, I'm looking for a continued move lower and aggressively to sell rallies. It has not happened yet. We're still looking for a 2040, 20240, and 2040 in the ES. Okay, that's important. Just want to show you the Bollinger Band starting to pinch again. I think you get another day or two of either sideways consolidation, slightly up where the Bollinger Bands start to catch up, and then we get some sort of a pinch like this, and then we're going to look for another move up and or down. Okay, IWMs. Now look at the IWM. You could see clearly that it has not made a move like the Spiders has or the ES has. This is still very weak for the last 2 years. You see the big supply. It tried to rally, didn't quite get up to here, and then sold off. Made a lower high, and now we're at this M-top formation again, right? That lower high from this previous high, and we did get a break, and now we're getting a back test. I think that if the market does start to correct, you could start looking to sell the IWMs or the Russell 2000 ETF or the TF, which would be the future. I think it would be a great opportunity as this is the weakest index of all. All right, diamonds, same thing. Really hasn't gone anywhere. The diamonds actually been holding up really well. It is a lagging index, but you can see here we've gone nowhere from here. Pretty much all of March, all the way down into now we're going into the summer months. So we haven't done anything. So I would stay away from the diamonds. Not really an attractive index to trade. The Qs. Take a look at the Qs, guys, and you could see how weak the Qs is. Here's another index that I have no problem looking to short on any confirmation of a trigger. So if we get a little bit higher into here and we look to short, first target would be 102.70, and of course the ultimate target would be 97, and then of course this area here. But right now it's still early, so we want to make sure that the markets can pop up a little bit more. Let's see what kind of momentum it has to push higher, and if it does fail just under that 61.8% retracement, that would be a great stop. Great to manage because you know where your stops are and you know where your take profits are. Have a great day. A quick admin note, guys. There'll be no video until next Wednesday, okay? Just taking a couple of days off on the videos. No video until next Wednesday. Be careful. Tomorrow's non-farm payrolls. I will go really light the next couple of days because there's going to be virtually light volume, and you don't want to get caught up into a trade where you really can't make your money back, okay? Have a great day. We'll see you next week. Happy 4th for those of you who are in the United States.